AI is going to write all the software from now on, and we won't need these software companies anymore.
All the software companies came down 30%. The market's trying to figure out who's going to survive this and who isn't.
These two major pivots that Microsoft made turned it from a tech dinosaur into a leading tech company.
Not only did SaaS not kill their business, they built a machine that enabled other people to use SaaS.
What if there was one stock that makes up 5% of the stock market and likely 5% of your portfolio? And what happens when that stock starts to crack? What I am asking is, can AI kill Microsoft? Or will the AI boom lead Microsoft to a monster opportunity? This is Top Stocks with Matt Weinschenk, and we're here to go deep on the top stocks in the market. I'm an investment analyst and economist with over 2 decades of experience, but more importantly, I have a huge, experienced research team at Stansberry Research that has done all kinds of incredible things. They've predicted the dot-com bubble and the financial crisis. Recommended Berkshire Hathaway at $56, it's at $500 now. Recommended Nvidia in 2016, Bitcoin in 2017. This is just what we do. All right, so we're going to figure out what's next for Microsoft today. So, Bryan Beach, I brought you in. You are a CPA. You worked in corporate finance, specifically in software.
That's right.
For the last decade, you've been with Stansberry Research as an analyst. And Microsoft is a stock we've both been covering. We've recommended it to our readers and our model portfolios a long time ago. I think both, in both of our services, it's a 10-bagger or more. So this is one of the best stocks and the best businesses of all time. And so just to start off, people know a lot about Microsoft. It's a company they know. They see it in their lives. But to you, if I just say, what kind of business is Microsoft, how would you encapsulate that?
Well, it's really at least two businesses, maybe three, but I'll talk about just the big, kind of in two big chunks. Okay, there's a Microsoft you encounter every day at work: Word, Outlook, Excel, Windows. Back in the day, I mean, it's an operating system that runs all the kind of non-Apple computers in the world. We all see that every day. There's a Microsoft you don't see, which is a bigger company, or at least as big, depending on how you kind of divvy it up. Microsoft is one of the biggest developers of data centers, which enable other companies' computing power, right? Along with Amazon, Google, Microsoft is right there building these data centers, which has become a hot topic lately with AI. But it really goes back almost 20 years that Microsoft has really been building into that part of it. So if you describe Microsoft, it's the stuff you see. It's a pretty big company, and it's the stuff you don't see. It's also a big company. So.
Yeah, exactly. So people are looking for data center plays and everything, and sometimes they overlook Microsoft, even though it's one of the biggest ones. This company made 2 major pivots starting in, call it 2014 or something, and I'm talking about world-class, top-tier strategy decisions that totally revitalized the business. So tell me about those 2 pivots for Microsoft. And that drove them to where they are.
Well, and I can back up a little bit more than that. I don't know exactly if it was 2014, but to really appreciate it, you got to back up into kind of my old world. I was a controller at a software company for, I'm a CPA. That's kind of where I came from. And so when we were watching their transformation happen, the way it used to work is if you wanted to buy software, back in the day, you would buy a CD or even discs. You'd load it onto your computer and you'd own the software, right? And that was how you bought software. Companies, enterprise software is the same thing. Enterprise just means I'm a business that sells software. I'm going to sell it to another business. Okay. So you might sell 10,000 seats of the software or something like 10,000 licenses. It's basically the same thing. They would have to buy big servers. Okay, they couldn't just load it into their laptop. They'd buy big servers to host all of this software that they bought, and it was a big investment. Like, call it $1 million, $1.5 million to buy a big software implementation. It was a big investment for them. So what happened with software companies, both for little guys like you and me just buying a disk or an enterprise, is everything moved into the cloud. This was starting in kind of the 2010s, but really kind of ramping up, as you said, in the 2014. It was interesting to watch this at the ground level from the software side. Some companies embraced it immediately. Some companies didn't. Yeah. But the way it works is you build, you host your software, you load it on servers that you own, and instead of selling it for $1 million or $1.5 million, you go to your customers and say, yeah, just pay us a $150,000 a year subscription, software as a service, SaaS, right? You sell us this as a subscription. And there was some resistance from this, both from businesses and both, from guys like you and me. I can remember I had a Photoshop disk that I had loaded onto a computer once upon a time, and I owned it. And then Photoshop, which is owned by Adobe, came back at me and was like, yeah, now if you want to use this, you got to pay us $9 a month, and you can access it via the web. Forget about what's loaded on your... And I stopped doing it, right? There was some resistance there from me. But that transition was a huge deal. And many people, by 2014, I've been following Microsoft since, as an investment since 2008, already considered Microsoft to be a dinosaur in 2014. And so that transition was difficult. To get people to think of Microsoft, to just change the way they think about having software. Instead of one big purchase and I own it forever, I'm going to pay you a monthly amount to access this stuff. Yeah. So that's the first pivot. The second pivot...
Well, I want to talk about the first pivot some more. So this is SaaS, right? This is software as a service.
Right. This is the birth of SaaS, right? So nowadays you're seeing all these headlines about the death of SaaS. This is going back to the birth of SaaS, right? Which is, 10, 15 years ago.
Right. Yeah. And so Salesforce was kind of the biggest and most well-known pioneer of that. And they're kind of model. The whole model. And they're kind of the ones who went out there and really had to pitch this way of doing it to businesses, right? They were like, what do you mean? Like, you used to it was like buying a CD-ROM versus buying a subscription, right? It's all up front or it's a subscription.
Well, I think they had an easier job, and I don't know, that's a matter of opinion, but their so Salesforce was a CRM business. And from day one,
cloud native.
They were a cloud business, so they never had to retrain their customers for this. Right. For the customers, it just looked like a service, like a cable TV or something that you're used to paying every month or every year. So I don't know if it was more challenging to them. The bigger challenge, I think, was companies like Adobe, who had been selling, and that actually is getting back to my Photoshop. Example. Adobe ended up buying Photoshop and owns it. So Adobe, their customers were used to just paying the big chunk, and they ended up having to go back and say, we're not going to sell it to you like that anymore. And that was that was a brave step. Right?
It was extremely brave. And so for the business, right, for the software company, the pitch is so much better because you can say, hey, you can get in for a lower price, right? So it's easier to get that customer.
Right.
And then what we found as the SaaS business went along through the 2010s is these subscriptions were super sticky. Yeah. Like, people get in there and the retention rates are so high.
Right. Right. So what's interesting is it seems so obvious in hindsight, but that was not a given, right? Like, we didn't know that right away. And some software companies very much resisted moving to the SaaS model. Yeah. But if you go back to the company where I worked and where a lot of companies work, you work hard, you have a sales team that gets out there and they try to earn that $1.5 million deal. After 4 or 5 years, even after some upgrades, that software is outdated, right? Mm-hmm. So now we got to go right back out into the field and win another big deal against the competition. We had 2 or 3 big competitors. And it was a lumpy business. You got that really big $1 million deal, but boy, you were going to have to roll up your sleeves and fight for it again in 5 years. The SaaS model, what happened, if you've got good software, people just continued to renew.
They get in there, they build it into their workflow, they put all their data there, they get all incorporated in their system, and then they almost can't. It's called like lock-in. You can't get out.
But that's only if you're a good company. Right. Not every software company is sticky like that, but the good ones should be. And you're giving people the upgrades automatically. They don't have. We used to have to send people out to their servers and have them work on the servers and upgrade it there.
New features, it all just shows up.
It all just shows up when you log in. That's another benefit of the SaaS model. But one of the reasons it took Wall Street and the stock market a time to get those $1 million deals were fun, right?
Yeah,
Like there's
yeah.
just great to see that cash flowing in the door. And it took a while for Wall Street to realize, wow, a sticky $100,000, a sticky $200,000
Yeah.
is actually way more profitable than a lumpy $1.5 million.
And so you can look, I mean, financially and for an investor, this is great. You can pull up Adobe chart right now. I'm sure we'll show it to you. I don't even have to point out to you where they switched to a SaaS model because it sent the stock.
It was 2014.
2014. So that you got high margins, you got high, retention on that. These people keep coming back, and then the multiples the market was assigning to these stocks just grew and grew and grew.
Right.
And Microsoft did the same exact thing, but it was even harder for them than Adobe, I think, because they had, Microsoft was a dinosaur. It was dead in the water. If you look at a chart of Microsoft,
from like 2018 or 2008 to 2014, it was pretty flat. It just couldn't seem to break the $20 to $30 kind of range.
And they had a CEO in Steve Ballmer who came in after Bill Gates, and the culture that Microsoft had was extremely rigid, and they had these cash cows in Office and Windows, and anything you did to challenge those would be completely shut down. Like they gave up so many good projects. And then Satya Nadella came in 2014, and he said, no, we have to. He was a cloud guy. He offered free Office. Like it used to be, why would we let anyone use Excel for free for even 1 minute?
Right.
We have to get otherwise people won't buy it. And he just totally upended the system. He made it a subscription. He made it so that it was free. And this was a huge, huge, huge culture shift.
Right.
But that's what brought Microsoft back to the modern era.
And so that's Microsoft, the software company, right?
Yes.
The other thing that Microsoft and Amazon and Google and Oracle to a lesser extent, which is the accounting software I was using. It's funny that the companies that really did, they invested in the infrastructure that let other companies operate a SaaS model, okay? And so somebody needed to, there was an arms race to build out, and we'll use the word data center, although people have a different idea of what that is, but this is the cloud data centers.
Yep.
There was an arms race to see who could do that. And so you mentioned Salesforce.com, which is a great, or Salesforce, which is a great example of the stickiest thing. And in fact, I talked to our sales team. I'm like, what would it take for you to get rid of sales? They're like, we won't do it.
Yeah. I'm
like, what if they raise the price 10%? We can't do it.
Yeah.
It's got all our data. It's got everyone's trained up on it. Like it is incredibly sticky. And I remember when we bought Salesforce around 2015, I was here. So Salesforce uses Amazon Web Services. AWS is that's historically their cloud partner. Yeah. So it's not like Salesforce bought all the servers themselves and loaded it. They're using Amazon's cloud. Google, same thing. They built all these data, and I think like Spotify uses the Google Cloud, and Shopify. If you've ever, most websites that sell stuff are Shopify websites. Microsoft was right there with them, and in fact, in building out the infrastructure to enable SaaS computing. Yeah. Microsoft is really big, not necessarily enabling software companies, but enabling big companies like, for example, Walmart. Walmart's a big customer of Azure, Azure is the name of Microsoft's cloud business. And they're not selling software to anybody, but they've got a huge tech department there in Bentonville, Arkansas. You don't think of that as a tech hub, but I mean, they've got to get all the logistics squared away, all their pricing, everything that makes Walmart run is run through Microsoft Azure, and most banks out there are running through Microsoft's cloud. So in addition to Microsoft doing that transition from perpetual licenses to SaaS licenses, they were also making enormous investments, and this is that second part of the business, in enabling other companies to use the cloud. So
the two pivots are software as a service and what I call infrastructure as a service. It's actually like almost a hardware play where you have these data centers.
Yeah.
So those are the two major pivots. And these two major pivots that Microsoft made turned it from a tech dinosaur into a leading tech company.
Right.
And so let's look at what that did for the business and for shareholders.
If I split the business up into three parts today, we've got The cloud business, which includes AI stuff, which we're getting
Yeah.
ready to talk about, that's probably let's rounding about 40% of the revenue, right?
Mm-hmm.
Selling Microsoft to companies so they can use Outlook and Word and Excel and stuff like that. I think that's called business processes division. That's about 40%, I'm rounding, of revenues. Actually, that's most of the profits, about 50% of the profits, 50-something% of the profits. So that's a good business,
Mm-hmm.
right? The stuff that's maybe most visible to you and me, if you buy a laptop at Best Buy or off Amazon and it comes loaded with Microsoft, that's their third business, right? Like selling software to guys like you and me, or Xbox to our kids, or other little parts. That's about 20% of their business.
Okay.
So
the Microsoft people think about is basically 1/5 of the real Microsoft.
that's right. That's
Yeah.
right. Yeah. I mean, the stuff that's most visible to us,
Yeah.
buying a laptop or a desktop with Microsoft Word loaded on it. That's
And the old business was great, right? It had great margins, so it made sense why people wanted to stick to it. And so if you look back, I have the numbers up here. If you look back to 2015 or 2014 to now, their gross margin went from 70% to 60%.
right.
Now 60% is most companies would kill for a 60% gross margin.
Right.
But it takes a lot of courage to pursue a path to reduce your margins. Every instinct in that company and the management team is widen your margins, widen your margins, widen your margins. But since they pursued these lower margin businesses, sales went from $86 billion to $305 billion, and net profits. Let's go with operating income went from $30 billion to $142 billion. So
Right.
you shrunk your margins, but since you did so much more
Quadrupled
revenue,
or whatever.
the earnings have, exactly. The earnings have, I don't even know what that is. That's a 5x
Yeah.
for investors.
Yeah, and if you look at the stock chart, for those of us who were in it, for a long time, it bounced around doing nothing.
Yeah.
Because everyone thought SaaS was killing it. It's a dinosaur. SaaS is going to kill it. Not only did SaaS not kill their business, they built a machine that enabled other people to use SaaS, and their stock price started exploding. It finally went from broke out of that $30 range to the $50 range, 50 to 90, and it hit 400 this summer, I think, last summer. Yeah. It's now back down 30 or something percent. The SaaS-pocalypse. We'll talk about that in a minute. But for investors, this transition has been great. I mean, it's been a fun ride. Like you said, we are two different publications, both happen to recommend it in 2011, 2012. It's been a 10-bagger or more.
And another interesting thing about the modern era of software that
Right.
lets Microsoft do this when others couldn't is that software used to be the land of disruption where a startup could come and take your business. But this cloud business requires billions and billions of dollars and that's why Amazon could do it. That's why Google could do it.
Isn't that interesting, right? Because Amazon, if you had told me in 2002, or 2005, that software was going to transform forever, and that the company that would make it happen was like the online bookseller, I would have been like, no. I mean,
Right.
but Amazon is the company that had the cash to make it happen.
Yeah.
Google, same thing. Google's a search engine, right? Like you don't think of it at Microsoft. That kind of makes sense. It was at least a software company already, right? So it makes sense that they're kind of, but there's an arms race. I've talked about it, and we'll talk about it some more as we fast forward into 2025 or 2024. The companies in the arms race aren't necessarily the software company. It's the companies with the money, and it was Amazon, and it was Google, and it was Microsoft, and to a lesser extent Oracle back in 2010. They really started building it. Actually, Amazon built this out for themselves.
Yes.
Like that's where the first company to use cloud. We give Salesforce.com the credit, but I mean, Amazon was using the cloud for themselves. And then when they saw this coming, they're like, we could use this for any software company, and we could rent all these servers. We've got the expertise, we've got the buildings. So Amazon and Microsoft were kind of that first wave of companies, and that's an important point, right? When we talk about disruption, not everybody has $100 billion of cash lying around, or hundreds of billions of dollars. You've got your Bloomberg terminal up. I don't know what the cash balance is right now for Microsoft, Amazon, but you got to have cash to be in an arms race.
Yeah. Well, I mean, Microsoft has $77 billion in free cash flow coming in and $89 billion in cash on the balance sheet. But let's dig in, because AI really is changing everything now. We're looking at this SaaS-pocalypse where these software companies are all falling. Microsoft is down. I think it fell 7% in a single day. It's down, 15% or something off its high.
Right.
And the story is that AI is going to write all the software from now on, and we won't need these software companies anymore. And so Microsoft is coming down a bit. So let's not talk about the cloud, but just the software business, that other 40%. How does Microsoft fit into this AI future?
First of all, yeah, I mean, I think the SaaS-pocalypse, when you see that headline, right? Like, all the software companies came down 30%, basically, since the summer. I think Microsoft's more than 15% off their high. I don't have it. I think it's more like 30%. Okay. And the market has to figure out, I think the market knows not everybody's going to be hosed, right? The market's trying to figure out who's going to survive this and who isn't. Mm-hmm. And I just put on, kind of my accounting hat, because this is where I came from. At my company and at our competitors, the biggest expense probably was paying the sales team. Those guys made good money. No. But after that, two of the biggest expenses were R&D, research development, which is coding, right? Like software coding. We had a very big kind of call center support team that we needed to, it was a very robust team. I imagine most software companies did too. Those are two things that AI automates, right? So when I see AI coming down the pipe, as someone who come from that industry, I mean, I was like, this is a great thing. This is going to, well, not for the people who get maybe replaced,
you're going to reduce some costs.
It's going to reduce cost for, coding. It's going to just make coding more efficient. Mm-hmm. It's going to make serving your customers, whether that be troubleshooting or whatever, it's going to make that even easier. Mm-hmm. I saw AI as kind of a positive, and I think that I do think the market's right? AI is going to disrupt some software companies, but all of them just sold off 30,000 or 30%. This is, I mean, I guess it's relevant that it's late February right now, late February 26th. Sure. So I don't know when you're watching this, but everything's down 30%, and the market really hasn't figured out who's going to be a survivor. Now, remember, I'm glad we took the time to talk about 10 years ago, because we've seen this movie before, right? Mm-hmm. Everyone's like, oh, is Microsoft going to survive this whole SaaS thing?
Yeah. Is Microsoft going to survive mobile? Is it going to survive the internet? And now it's
and now here we are again, right? Microsoft's down 30%, just like everything else, or whatever the number is, and we have to think about, oh gosh, are they going to be able to handle AI? Well, you know what they're doing? They're doing the playbook that they did in SaaS. So yeah, they're implementing AI into some of their customer-facing things, Copilot and some things like that. They're making their products more efficient with the way they code. So is everybody else. That's not a huge advantage for Microsoft. Everybody's doing that. But they're one of the big boys who has the money to be paying for, the word is hyperscaler, but the new breed of data center is not to enable cloud computing. It's to enable AI, artificial intelligence. All the AI companies, right? Like, you're going to have to use this compute power, and it's the same It's the same players. It's, again, Amazon's in the business. Microsoft's in the business. Yeah. Again, Google or Facebook now, or Meta, but again, it's just the big companies with cash who are now in an arms race to support this. Interestingly,
the arms race is a huge opportunity on the data center side, but just on the software side, so Claude Cowork comes out in Claude Code, and you can make a app that does something like, they call it one-shotting it, where you can say, make me an app that tracks the books in my library or something, and it just comes out and it works. And so people go, oh my gosh, why are you going to need to buy software? You're just going to make your own. But on this enterprise level, the challenge is getting all your data in there. literally knocking on the door of the accounting department saying, hey guys, we need this information out of you. And they're like, well, we don't want to share it. And it's an organizational issue. It's not just coding was never the hard part to a lot of these businesses.
Right. Yeah. And there's a couple of examples we've already touched on today, right? With Salesforce.com, or Salesforce, it doesn't matter if you don't like it. Like you can't get rid of it. It's ingrained. I was writing about this last month. I'm going to pull up the quotes. These quotes are they're all over. I mean, this was big news on Twitter and everything. Okay. This isn't my journalistic, okay. But this is, you brought up Claude Cowork. Okay. So Anthropic, that's the name of that company, right? So, this is an executive named Nick Lin, he mentioned Microsoft, right? He says, financial models themselves, they're not just these beautiful Microsoft Excel spreadsheets. They're a way finance analysts inject their own judgment into see what the future looks like. He's saying, listen, everyone's using Excel, right? Like everyone's using it. And he said, are we going to come in and steal that? No, he says, with that in mind, we want Claude to be really good at understanding these core finance concepts and manipulating systems like Excel and spreadsheets to be able to do that calculation. Notice how he said that, right? I mean, if he wants Claude to be successful, they want to use it to make Excel better. Right. They're not replacing Excel. Yeah. So one more quick quote I threw in here too. This is Jensen Huang, who's the CEO of chipmaker NVIDIA, right? So when we talk about the trillions of dollars being spent, a lot of that's being spent on NVIDIA chips. Exactly. This is the company that's enabling the AI revolution. And he says there's this notion that the software industry is in decline and will be replaced by AI. It is the most illogical thing in the world. and that kind of made me feel better because I'm like, I don't get it. As someone who was in software all those years, like this is going to help us, right? Yeah. Like this shouldn't be. Now, again, some software companies are going to be replaced, but if you've got a bunch of data ingrained in, or if the whole if you've got entire ecosystems at a company that are depending on you, it's hard to rip that out. And oh, by the way, these big software companies, they're going to be pretty good at AI too.
Well, that's what I was thinking about. So there's a couple things you made me think of. One is this concept in economics called complements, right? There are products that go together, like peanut butter and
jelly,
right? Like there's all these things. And, if you were a peanut butter maker, if you could somehow drive down the price of jelly, you're going to sell more peanut butter, right? And so if there's two costs to Excel. There's actually paying Microsoft for it, and then there's the time you spend in it building things. And if Claude can make that quicker and make Excel more valuable and reduce the cost of investing in it, Microsoft can actually sell more of it. Yeah. And, people are so worried about Claude Code. Well, guess what? Microsoft has been all over this. They bought GitHub. They built Copilot on top of it. That was the first code autocomplete, right? Yeah. You've got VS Code, which is like the interface that people code in. You can then click to deploy it into Azure right away. So, I mean, they've got to compete and they've got to be good. But if vibe coding is now available to everyone and we're all going to be software makers, a lot of people are going to be doing it through Microsoft. Yeah. And just to point out how forward thinking they were on this, there's actually two things that are kind of amazing that they did. One, they were one of the earliest investors in OpenAI. They put, I think,
which is ChatGPT.
So I think they put $16 billion in there, and it's worth like $230 billion now. Which, I mean, I don't even think they care about like the return on investment, like $230 billion. It's not quite a rounding error, but they've been in there, right? And they've tightly integrated with OpenAI. That's what fuels Copilot. At the same time, they're 100% open to putting Anthropic and Claude products into their products as well. Like in Excel, they've got a $33 billion deal with Anthropic, which is almost crazy for them to, an old Steve Ballmer business. I don't mean to pick on Ballmer. I kind of do, but an old Steve Ballmer business would say, we've invested in OpenAI. That's our bet. We're not messing around with Anthropic. Yeah. But to be open to this and to allow to say, look, whatever the tools are, you come in through Microsoft, you use them here, and that's where software developers are going to work. I mean, this is They are not one of the SaaS-pocalypse victims in my mind.
I can put it a different way, and I'm ripping someone off. I read about this a lot, so I don't know who exactly said this, but it was a fun analogy. And I'm screwing it up a little bit. But if there's a pill that you and I could take to make ourselves, or our shoes we could wear that made us 50% better at basketball.
Okay.
Right?
Sure.
I'd be a lot better at basketball, and you would too. But if LeBron James can take the same pill, he can wear the same shoes, right? So we're no better off. We're no better off in the grand scheme. Now the whole world just got a lot better at basketball, and that's kind of cool, right? But like relatively speaking, the NBA is going to be the same guys, right? Because everyone's taking the same, everyone's taking the same pill. I don't know which analogy you like better, peanut butter and jelly or the basketball shoes, but the point is the same, right? If these new tools are available to the incumbents as well. I mean, and so again, there's going to be some people picked off at the bottom. And if you want, we can talk about the characteristics of those kind of businesses. But I don't think it's the kind of company that is so ingrained in corporate culture and society in data and has so much data already in their system. Those are the companies that are going to still be sticky. And oh, by the way, they're using AI to improve their products and services.
Yeah, and just like I've argued this for Alphabet before too, when you have all those customers and now you're putting AI in front of them, you've got a distribution advantage. So if I have the numbers right, Copilot, they haven't really been sharing numbers openly on this, but they recently said 15 million paying Copilot subscribers, add-ons to Microsoft 365, which, depending on the price, because there's price breaks, is something between a $2 billion and $5 billion business. So in other words, invest in OpenAI, turn it on inside Microsoft, $5 billion coming in the door. And that's only 3.3% of the Office 365 install base.
Right.
And most analysts are underwhelmed with that. They're behind the curve. They want to see faster growth on that number. And that's probably true, but it's real money coming in the door because they could put it right in someone's account.
And if somebody's building a competitor by scratch, how are they going to get
it's a lot harder.
that in front of all those customers?
Right.
So I've been forced to try Copilot just by using, because we're a Microsoft customer at this company. So that's another good point.
Now, on the other hand, if you look at Microsoft's intelligent cloud business, the software is threatened by AI, but this is where the AI boom is happening. This is money flying in the door. So how does intelligent cloud capitalize on the AI boom?
Well, I think you've written about this more than I have, this side of it. So we talked about we talked about the cloud revolution, right? And I believe that it was building those cloud data centers that really is behind that 2014 boom, okay? In revenues, in stock price, and any metric you want to use. They're trying, this arms race is, everyone saw how that worked in 2010, 2011, 2014. Everyone saw the arms race. Everyone in that arms race won big, right? And so they're trying to do it again, right? And it's not a bad bet. Right. And so what we're seeing, so I think that Microsoft is applying the same playbook that they did 10, 12 years ago, that Amazon did 10, 12 years ago. Yes, we're going to have AI baked into our software, but we're also going to help everyone else bake AI into their software. We're going to be an enabler, and we're going to be a software company. I think we're at a point here in late February 2026, where the market sees the amount of money being spent on this, and it's way more expensive than building a cloud data center. These NVIDIA chips constantly need to be replenished. It is incredibly expensive and I think that the market is rightfully a little bit wary of what's happening. And if you pull up Apple over the last couple of months, it didn't have that fall. They came out yesterday, I think it was, and officially said, we're not doing the arms race thing. Yeah. We'll implement AI into our stuff, but we're not gonna be doing the arms race thing. So there is a risk, right? It's a lot of money they're spending. Okay. And I know you've written and studied more about what's happened to those investments. But I want to make it clear the market's not completely off base, being a little bit wary of the sheer dollars, because we're talking trillions over the arms race spread across all these companies. I mean, it's a lot of money. I will say this: they've got the money, right? Like it's not like they're having to borrow money. Oracle is borrowing money to do this to play in the arms race, but it's not like it's going to cripple them if they've got the cash to do this.
Yeah.
You see what I'm saying? It's not going to drive them to the brink of extinction. They might just have to, be like, all right, Amazon won, or all right, we went a little overboard. We actually didn't need that many chips.
Yeah.
I mean, so there's some risk, but it's already kind of cashing in. And I think, you've got some numbers to support that. I think that inside Microsoft, they're probably looking in the rearview mirror and how they won the last big transformative event.
Here's the way I think about it. If you take oil, right, and we used oil for whatever our lamps in our house, and then all of a sudden someone invented the car, and you were like, okay, we're gonna need a lot more oil all of a sudden, right? And so that's what happened with AI. Like, we used compute. And this uses so much more compute, both on training and inference, that all of a sudden it's like we need so much more than we had ever thought. And Microsoft was the oil driller in this scenario, right? They were the ones building the data. They own the oil reserves, right? These are the data centers they've built. And so the growth in their cloud division has been ridiculous. We're talking 30-40% a year at a huge size. So there's a risk there, right? There was a time when the more these companies said, we're going to spend this much and we're going to spend this much, their stocks would go up.
Right.
And now when they announce big levels, their stocks go down.
Well, I meant to mention that Apple is the one.
It's not. Yeah,
and that's why. I mean, the market is scared of these paychecks. Sorry to cut you off
So
there.
And Microsoft went from $80 billion in capex last year. They're going to go to 100 and 125 the next year. And so that has been, like, people are starting to have the concerns about that. But if you watch the way this AI boom has gone, if you take the ecosystem as a whole, like, they were like, we're going to spend $200 billion, and people were like, really? And the returns on that were good because these data centers are still running full time. Then they're going to spend $500 billion. Now we're going up to $1 trillion, and they're still fully booked, fully running. And the real tell here is that Microsoft and these other companies are offloading future demand to these neo cloud companies like CoreWeave. So what they're saying is Microsoft is promising people an amount of compute, and they've got to build to get there. But then they're taking the riskiest part and saying, I'm going to contract that out. Mm-hmm. So now if the demand comes down, Microsoft says, oh, guess what? We don't need this neo cloud from CoreWeave. They're taking on all the risk. So they even have this buffer. Mm-hmm. And again, OpenAI is building data centers. They need to get that money from somewhere because it's not coming from revenue yet. They need to get that from VC, and their obligations, so to speak, are astronomical. But Microsoft is making the money. So these top three players that can actually afford this and say, even if it doesn't go higher and higher and higher every day, even if some of the demand comes out of here, they're still confident in their return on capital on those. That's going to give them the opportunity to keep growing.
Well, and we were talking about backlog before we started rolling, right? Like, backlog is pent-up demand that Microsoft knows that they can put a name on it. It's future revenues, right? Yep. And it's $625 billion. Something like 225 of that is from OpenAI. So that's kind of a little bit of incestuous relationship there that is a related party. This is a big concern for some people. I don't including our friend, Whitney, who's an analyst here as well. I mean, Whitney doesn't like the fact that everyone is each other's customer in this new AI system. But even if you back out the demand and the backlog that comes from OpenAI, Microsoft still went from like $300 billion in backlog in 2025 or 2025. I'm kind of rounding to like $425 billion today. Even if you back out OpenAI, it's still, the demand is growing. Yeah. It seems like it's going to be there. There is risk, and some of these kind of the web of how NVIDIA is investing in OpenAI and everyone's buying NVIDIA chip. There is a circle flow of money that makes some people uncomfortable. But the money's coming in the door.
Yeah.
And I think that the benefits here outweigh the risks. I think this is a smart move.
And people are when OpenAI says we're going to spend $200 billion, like people know that's not fully guaranteed, right? They're haircutting that mentally and in the valuation. So there's so many questions about how good AI is going to get, how fast it's going to diffuse. But the baseline compute load that Microsoft and the big players are supplying, I'm very confident that's going to stick around. Like, it's not going down. And if you look at Intelligent Cloud, this thing is growing it's $100 billion right now. It's growing at 40% a year.
You're talking about the cloud segment of the overall Microsoft. So we were talking about the two or three pieces of Microsoft. This is the cloud piece that it houses the old cloud business and the new AI stuff. Yeah.
So 40% growth a year is more than enough to keep this stock going higher, in my opinion. I mean, that's a phenomenal growth rate.
Well, and if it just gets back to where it was this summer, I mean that's a pretty good return as well. Again, you've got the chart in front of you. What did it go from 400 to or 500 to 350 or something like that? So yeah, I mean, I think that we've got not just growth, but just getting back to kind of where it was. Yeah. There could be a pretty good return.
And we have I have an interesting thing I want to talk about an argument that Microsoft stock can't go down, which is a little silly. But before that, just to talk about valuations on Microsoft right now, it's not expensive anymore. I mean, so this decline from, call it 550 to 400, paired with all the fundamentals going up, earnings, revenue, everything is going in exactly the right direction. So you kind of got the squeeze play here, where the stock's going down, everything's going up. So this thing has dropped from 35 times earnings late last year to 20, right, on a blended forward. EV to EBITDA's dropped from 24 times again in 2024 to 13. These are steel prices.
Well, it's certainly way lower, and one of the things I like to do when I'm writing with my readers, we sometimes just talk about it, all these acronyms, EV to EBITDA, price to earnings, just think of it as your house, right? You've got a $200,000 house. It's 2,000 square feet, right? Price per square foot, you can do the math, right? Now let's imagine that you invest a lot of money to put an addition on it, right? And now it's a 2,500 square foot house. So you're like, this is great. This is a better house than it used to be. Yeah. And imagine the price comes down from 200,000 to 180,000, right? And so the price per square foot comes way down, right? Because you just made it a bigger house, but the overall cost went down. You're like, what's going on here, right? I mean, this is kind of what's happening. Microsoft is making way more money than it ever has, and the share price has come way down. And now you could argue that it was overpriced to begin with, right? Like maybe in my example, 200,000 wasn't a fair price to begin with. So you could argue that maybe it was overpriced back then. But I don't know. The topic of Microsoft's valuation multiples is a deep one, right? It gets into a lot of different things. But I think that certainly it's a better company than it was a year ago. And it doesn't really make sense that the price is down 30% based on what they've done the last 6 or 8 months.
So people who don't even know that if they're really in the stock market, if they have an index fund, they've got 5% of their money in Microsoft. And that's interesting because it sounds risky or it sounds good. I mean, I think that Microsoft is a great stock. But at the same time, there's an argument that we've been studying that these Magnificent Seven top stocks are only going to keep going up for the most part. Do you want to break that down?
I don't know that they're only going to go up, but this is a huge topic. Maybe next time I'm on here, we can tackle this, but let's try. Microsoft is caught up in this. Yes. And so I want, it is worth mentioning. Okay. So far we've been talking about Microsoft, the company, the software company, the AI. This has nothing to do with that.
This is a market structure.
This is about Microsoft's stock.
Yes.
And of course, Microsoft's stock is related to the company, but you can almost forget the other stuff we've been talking about as it relates to this topic.
As you explain this, it is specifically blind to the fundamentals of these companies.
Right.
Yes.
So here in the U.S., let's try and do this quickly, right? So here in the U.S., we have a 401k plans where people are trying to, save for retirement. It's a great thing, right? Mm-hmm. The primary vehicle for that is S&P 500 index funds, okay? And the way S&P 500 index funds work is they are market cap weighted, okay? So if you put $500 in, you're not buying $1 of each company, right? The bigger companies you're going to buy in relation to how big they are, right? And the smaller companies you're going to buy almost nothing. So we can debate whether that's smart, whether it should be set up that way. That's doesn't matter for this discussion. That's the way it is. And people, and you talk about whether you realize you're buying stocks or not. I mean, I did a presentation on this. I talked to my dental hygienist. Was like, oh, she found out I don't understand. I don't do the stock market. I'm like, well, you're in a 401k or any? She's like, oh, well, I contribute to a 401k, but I'm not in the stock market. And she explained to me that she was in a retirement tracked fund where they and that those are 2065 or whenever she's going to retire. Those are S&P 500 funds are in there. Some portion of her mix is between stocks and bonds, and the stocks are in the S&P 500. So whether she realizes it or not, she's buying Microsoft shares every paycheck.
Yes.
She's buying Apple shares every paycheck.
Yes.
She's buying Amazon shares those big companies. She's buying a lot of them.
Right.
Okay. And so I like to start with the kind of an individual level, right? And we did some back of the napkin math on this, right? If you make $100,000, and I'm not trying to get, it's just a round number, all right? Okay. And you're contributing 6%, and your employer is matching 3%. Again, all of these are just squishy numbers. Uh-huh. You're probably buying $10 of Apple stock every paycheck. Yeah. You don't even realize it.
Right.
Apple.
Which $10 doesn't sound like a lot.
Okay, but there's 70 million people in that are contributing to their 401k.
Yeah.
Okay, so the stock market is a measure of supply and demand, right? So we talked about my house or the neighborhood or whatever, right? If you own that $200,000 house or whatever that we were talking about just a minute ago, and all of a sudden 3 new families move into your neighborhood per month, it's going to drive the prices of the houses up. That's demand, right? You didn't do anything to your house. You didn't do anything to deserve that, but there's just 3 families moving in. What's happening with retirement funding, it's reached a critical mass. It's now $16 to $20 trillion in index funds, and 70 million people are adding to that every 2 weeks. And those inflows are going to the biggest companies, right?
So that's the most important part. The more there's S&P 500, right? You're putting 5% in Microsoft because it's one of the biggest companies, and you're putting pennies into the smaller company, right? The tail is huge,
right? The
distribution.
So you're putting probably $30. At $100, you're probably putting $30 into the top 5. Yeah. I think that's right.
And so that drives them up. That makes them a bigger part, and that means the next paycheck comes around, people put more into those.
More money. And so the smallest in the S&P 500, I think it might be CarMax. Yeah. You're probably putting like 2 cents in CarMax, and you're putting $10 in Apple, right? And then that makes Apple bigger. And so the next paycheck, it's going to be even more skewed. So
and these are index funds, so they are just buying the index. They don't care if the company is a good company or bad company. So 2 of the biggest companies, Microsoft and Tesla, vastly different profit profiles. These investors, these index fund investors, are not showing any discern between Microsoft and Tesla. They're just the biggest, so we put the most in there.
And I wonder how many are like my dental hygienist. They don't even realize they're putting money in the stock market. Now, this is a very thorny topic, right? Mm-hmm. And if you look at the valuations for the Magnificent Seven, they're getting expensive. And a lot of the mainstream media and even the financial media is missing this. They're like, oh, well, it's because everyone is excited about tech. And I'm like, maybe that's part of it, but like, it's this relentless bid. It's these people, to go back to the analogy, it's not 3 people moving into the neighborhood every month now. Now it's 4. Now it's 4.5 people. Now it's 5. So these expensive companies are just going to keep getting more expensive. Now, we were at a lunch yesterday with the guy who's really done more work around this topic than anything.
Michael Green, he's the thought leader on this, you would say. And what he has said, so like you said, people go, oh, well, people love tech stocks, or Google's very profitable, so those stocks are going up. But he broke down all the different ways you can slice and dice this, and everything he kind of has says, no, it's just the index funds. And index investing has gotten to be 50 or 60% of the market. As that gets higher and higher, this problem, if you want to call it a problem, only gets worse, that it keeps driving these higher. So his takeaway was these stocks, there's a risk building up here, but that it's going to keep driving them higher. Is that fair?
It is fair. I think, he really doesn't like the way that the retirement system is set, or the retirement savings vehicles are set up. And so, there's risk that at some point everyone pulls all their money out at once or something, and there's a collapse. If that happens, it's going to hit Microsoft a lot harder than CarMax.
But as long as every week there are tens of billions of dollars being deposited into 401k accounts, and they're going to Microsoft, Apple, Nvidia, Tesla, and the top stocks, they're just going to keep piling in every week.
No matter really what's happening. And I follow Apple pretty closely. It has not been a great 2 or 3 years for Apple in terms of good news, especially what's going on in China. But their stock price, it just has this tailwind. Yeah. And I believe that Mike Green said yesterday, and the tailwind from the relentless bid, which is what kind of people call this phenomenon of
relentless bid. Every week I buy.
Yeah. Into my 401k. The tailwind from that is like more than 20% a year for Apple.
Oh yeah.
So even if there's not any good news, any bad news, it's just kind of treading water. There's this tailwind from all this incremental demand flowing in there. So we've been talking about Microsoft all this time, right? I think of the relentless bid with Apple. I don't know why, but it's the same thing with Microsoft. And everything we've said about AI, about the history lesson with SaaS, all that's relevant, right? But the relentless bid is like a life preserver, right? It's like if there's bad news coming, this constant demand will kind of keep you afloat anyway. Yeah. So I think a smart listener or viewer might point out, well, if the relentless bid is so strong, how did the stock just drop 30%? That's a fair question, right? But I'm saying if you look at the last couple of times Apple and Microsoft have fallen 10, 20%, and it happens, 30%, it happens. They get caught up in the same economic upheaval that everyone else does. They bounce back pretty quickly. Or they have been. Mike Green will say it's because of this tailwind coming from, and he's onto something. I mean, I'm not smart enough to double check his math, but the argument is compelling. So I think that's an extra kind of push, tailwind for Microsoft, despite everything else, or in addition to everything else we've kind of been talking about.
It's an argument to keep your eye on this Mag 7 and not think they're going to get worn out as quick. They don't have to come back to earth, so to speak, as quickly as you might think.
Yeah, I mean, and if nothing else, next time you hear someone saying that the Mag 7 is because of investor exuberance, it's really not. Yeah. I mean, more than 50% of the dollars going to those companies are people who are blindly buying it and not even thinking about it.
Okay, so Microsoft, you've got opportunities in AI software, AI cloud, you've got the relentless bid. Is Microsoft a top stock?
I think it's a top stock, Matt. I mean, almost never we have the opportunity to buy Microsoft after a 30% drop. And when something like that happens, you're smart to take a deep breath, figure out why it's fallen, and kind of weigh the pros and cons. And I think that there's an argument that it might be a little too expensive compared to, when we first recommended it in 2010.
Wow.
It's a lot more expensive than it used to be, and that matters to some people. Like, I don't know that we're getting back to that 2010 valuation point anymore. So I think when Microsoft drops 30%, Because it's a great company.
Yeah.
It's always a great company. Whether it's expensive or cheap, the stock, it's always a great company. When it drops 30%, you need to take a hard look at it. Hopefully this podcast helped you do that.
Yeah, I agree. I mean, we're not traders here. We're talking about being investors, but hopefully compounding 15, 20% a year. In that view, Microsoft definitely a top stock. Nothing we say today should be considered investment advice and should be used only for informational purposes.